Welcome everybody. Hiya, how you doing? I'm Paul Archer, but you can say that because it's got my name down there, so you can see it on YouTube. But if you're listening on podcasts, obviously me saying my name's probably a good thing because you don't know who I am, do you? Okay, let's get down to action. This is our first live stream for a couple of weeks. I got married last Sunday, so I had the Monday off. I thought, well, why not? It's really rude not to, wouldn't it? So Shelley and I got married on Sunday, a lovely day, and it was absolutely fabulous. So anyway, moving on, life continues on, but I took the Monday off. So welcome to our live stream. Got a few new ideas for you and concepts and all that great stuff. Got some great stuff on KPIs. I've got a lovely little piece on landlord insurance, and I've got another little thing. Not a lot of you would know about this, probably, possibly you do if you're reading. I'm sure you are, but it's another nail in the coffin of banks, which is beginning to happen more and more now. It's quite scary. There's a lot of banks now moving into rental properties. They're actually, opening up rentals and doing up rentals and renting out money to make profit. That's not what a bank does, is it? Maybe that's what the banks will do in the future, but they're looking for a role to play at the moment, and they're losing out on their traditional roles. Quite scary, actually. Quite a few people on LinkedIn recently showing their name badges. They've had careers in banks. They started off as customer service advisors, and they all went into BDMs, and they're all now moving on. So things are changing. Anyway, enough of that. Let's get on with some of the concepts for you that I want to talk about. The first one I want to talk to you about is, I know you may have heard this before, you may not, but the official name is CBDC. Can you imagine that? We're just so good, aren't we, at making acronyms, CBDCs. That's going to excite you, isn't it? CB, get it right myself first, DCs. It's the title of this topic. And miss them at your peril is the key. So let's put a little title there. Miss them and then make a mistake at your peril, because they're actually really important. Anyway, what does it stand for? What does CBDC stand for? We're terrible in this sector, aren't we? It stands for Central Bank Digital Currency. Central Bank Digital Currency. So if I put a little C in there, it will probably make more sense for you. And what are they? And where's the market for this kind of stuff? Well, you probably, of course, have heard of Bitcoin and other cryptocurrencies, as they call them. Bitcoin and other cryptocurrencies have been in the press a lot recently. A lot of people making a lot of money, a lot of people losing a lot of money. They're not investments, they're pure gambles. They're using up a ton of electricity in the mining side of things, and they're running like a blockchain, and they're not owned by anybody, which is why money launderers seem to love them. Actually, ransomware companies seem to love them too, because when they put these companies on ransom, these firms, they always ask for bitcoins. It just kind of knocks it. Anyway, put those aside because they're not really that important. I don't think they'll be around for much longer because of the eco side of things, because they actually burn up more electricity apparently than Belgium does. But that's another issue, isn't it? So what's a central bank digital currency? Well, quite simply, it's a digital currency owned by the Bank of England, central banks. So let's talk about UK here. Bank of England, good old Bank of England, owns these things called CBDCs or government coins, as I think we prefer to call it, GovCoins. I read about that at the weekend. GovCoins is a better name than CBDCs. But actually, if you think about it logically, they're quite clever, because these government coins are digital currency. They'll be pegged to sterling. That's the key thing about them. They're not like down to the qualms of supply and demand and mining and blockchains. They're pegged to sterling. And that's really important, because sterling is something the government control and need to look after. So they're not like left loose. So they're pegged to sterling. And around the world, they're pegged to the various other currencies that the governments are using. Some of them maybe even peg them to gold as well, if that's the way they roll. They haven't got a very good currency. And that's the point, is that they are safe, they are secure, they are legal tender. That's the other thing as well. These government coins will be legal tender, just like the banknote in your pocket. The banknote in your pocket says, the Bank of England promises to pay the bearer the sum of £1 or whatever it is, or £50 if you're rich. And that's the thing, because all the other stuff isn't legal tender. There's Facebook's new one called DM. Have you heard of that one? They had another one called Libra. Now they're calling it DM. What are they up to? Some Latin alphabet. And they're not pegging it at the moment to anything. So it's a private digital currency, which, okay, Facebook's a big firm, but it's not really the bank. It's not like the government. So this is where it starts to change things, because it's legal currency. You hold GovCoins, or whatever they want to call them, in a central bank account at the Bank of England, and your money is guaranteed. You see, if you put your money in the bank, and I've banked with HSBC for years. If I put my money in with HSBC, it's not legal tender. People think it is, it's not, because you're giving the money to the bank and they can do what they like with it, obviously subject to capital controls, etc. They'll lend it out. But the money I've got in my bank account is not legal tender. It's not guaranteed by anybody. The only guarantee I've got is the Financial Services Compensation Scheme. What's that, 85 grand per person, something like that. And that makes you think about the legitimacy of all of this, because we all use banks, don't we, to deposit our money. They charge us an arm and a leg for this because they're not making profits by cross-selling anymore, because they can't do that. So their charges are starting to go up now. They charge for overdrafts and stuff like that, which obviously is their business to do that. But your money is not really yours. It's not legal tender. So why not move our money over to the government central bank? The Bank of England will hold all of our money. Let's face it, the Bank of England are the people that provide the money to lend anyway. They give cheap money to banks who then lend it on. Yes, they securitize stuff and they get money from wholesale markets, etc. But the vast majority of money since the financial crash that's been used by banks to lend has been government money, cheap stuff too. So why can't the Bank of England just lend money direct? So that's where it's going, isn't it? It just makes you think about that. The Bank of England can provide the same service as the banks, but a whole lot cheaper. And the great news is, of course, that the Bank of England is controlled by the government, so they've got total control over it, which is great. And there's one little thing called money laundering, because if everybody starts transacting in GovCoins, then money laundering ain't going to be a problem moving forward. Unless, of course, you want to deal in cryptocurrency like Bitcoins, but that's up to you. Joke apart, you might think it's a bit far-fetched, but that's the way economies are going. We don't have cash in our pockets anymore. I mean, I've had 20 quid in my wallet for about 2 years now, which I took out before lockdown. I don't spend cash, nobody does. And having money on digital, having a digital sort of government coin in sterling that's backed by Bank of England and I can just use to pay for stuff, just makes total sense. And they won't charge me so much. That's just the way it's going to be. It's another nail in the coffin of the banks. The banks need to find their role to play. I said to you, many of them are looking at different angles now to try and make some profits for the future. Interesting times for banks. Anyway, enough of that. Hope that's been useful. Bye. Did you like that one, did you? It's really good, actually, isn't it? It's really important stuff. You mustn't forget these things. These things will trickle in and they start to change things. That's how you predict the future. You see things change and you work out hard changes and trends, and then you see how they move forward. Anyway, let's get rid of this and let's give you a more relevant topic, I suppose, if you're doing any exams, because you don't get your tests on that in CMAP, are you? Yeah, it's not the syllabus. Let's talk about landlord insurance now. Landlord insurance is a type of general insurance, landlord insurance, which mortgage advisors get involved in heavily. General insurance, of course, is annual renewable stuff, payable monthly typically, but annually. It's usually sort of motor, house, marine, that type of thing is general insurance. We know about residential homes, but if you're offering a mortgage to a landlord, you will want to start looking at some kind of landlord insurance because you should, and therefore you'll need to understand how these work. Now, landlord insurance is very similar to any homeowner's insurance because it includes the usual stuff like buildings and contents and liability, but the liability has more relevance. But it also has many bolt-ons as well. You can add stuff to it, which makes it quite a comprehensive package. It's very competitive as well. There's a lot of companies offering that. And as a mortgage advisor, if you're dealing with a landlord, you should have some tie-in with somebody where you can promote a product to them because they need it. So what does it cover? Well, first of all, you've got the building, haven't you? The buildings insurance side. Not a lot of difference to standard buildings insurance, buildings cover. It covers the damage to the fabric of the property, the structure of the property, really. So it's not a lot different really to what we're used to. And it's essential. Lenders require it. It's mandatory. You do have to make sure that you're not lending on a flat, for example, an apartment, of course, where the flat that you're buying to let is actually covered by the block policy. The block policy covers the block, as they call it, block policy, and everybody's maintenance charge goes towards paying for the premium of that one. But that's the same with landlords or residential people, whoever you're dealing with. Now, contents insurance is slightly different. Now, as you can appreciate, the contents side of things, let's add that one in here for you. Contents covers all the fixtures and fittings inside the property, but it covers the landlord's stuff. So she's put into the property sort of semi-furnished. Now, when I was renting back in a couple of years ago, my landlord put into the property a washing machine, dishwasher, cooker, microwave, sort of general white goods, really, that theoretically are covered under a contents side of things. So he insured, or he should have insured, his own contents. I obviously moved in and put my own sofa in there, my own bed. So of course I would, as a tenant, take out my own insurance if I'm wise to do so. Many don't bother. But the landlord will have contents insurance to cover his or her stuff against normal perils like flood and fire, but also against accidental damage. That's a particularly important one to have. I would always add accidental damage because tenants sometimes have accidents, and therefore you'll need to make sure that's covered. It costs a little bit more, of course it does. Now, the other one, which I'll give a different colour pencil, I'll put that in red for you, is liability cover. And these are typical parts of a cover of a landlord insurance. And liability cover, as you suggest there, often called public liability, covers you, the landlord, in case your tenant has an injury or accident by something that the property has done to them. If they suffer an injury or something, and maybe a visitor to the property as well, it's not just the tenant. If they suffer an injury and they sue you for many millions of bucks, then you have to pay them. So I don't know, let's say you've got a roof which has a loose slate and the tenant has a few people around for party time because it's lockdown, gloves off, and the party starts going on and slate falls down and kills somebody outright on the doorstep. Now, that's your liability because you didn't keep the roof maintained. So that liability would cover you in that sense. So that's the essential part of it. But householders have that anyway. If it's a normal house, they have that anyway. But you don't often see a situation where you're going to be covered. But because you've got a tenant in there 24/7, they may well have an accident which was your fault. I think about these things, didn't you? Okay, a couple of extras for you. You can bolt on. The most important one is rent guarantee insurance. Let's put this in like a green colour here for you. Rent guarantee insurance. There you go. Now, the whole point about rent guarantee insurance, there you go, is it's a bolt-on, so you add it to your policy. And it covers you in situations where the tenant doesn't pay their rent, where they fall into arrears, and you have to make up the difference. So it's an essential thing to have if you've got a dodgy tenant who won't pay their money. This will cover you there. It also gives you money for legal expenses, like to repossess the property, to evict the tenant, etc. So it gives you costs of repossession and recovery of the property. So rent guarantee insurance is a pretty effective thing to have. There are extra checks for that, naturally. Sometimes they have to do a quick search on the tenant as well. Otherwise, they're not going to cover you for that because they're not going to cover everybody, aren't they? They want to be a bit careful on who the tenant is. That's the insurance company. But that's a nice little option for you. And the other one is home emergency cover. So I'll put that up there for you, emergency cover. We've got that here on our property. If the boiler breaks down, we get a plumber out quickly. If the central heating breaks down, we get a plumber out. A gas-fired plumber comes. British Gas do ours because they do, and they have access to immediate plumbers and fixing it and servicing it, and you can get the same thing done. So if your tenant phones up, the boiler's broken down, you just contact this number and a local plumber just rocks up literally that evening and fixes it, which would be great if you're living in Edinburgh and your property is down in St Austell, for example. So that's a fantastic thing to have. And so that's landlord insurance, really. Not tremendously expensive. Part of the deal of being a landlord, you have to factor it in. As a mortgage advisor, you should recommend it. You should. It's a duty of care to do so. You'll earn commission as well and renewals. So you really ought to be getting yourself a really good product available to advise or sell to customers. Hope that's been a good update for you. Bye. Good. Hey, it's great to be back. Apologies for last week, but I had a good excuse, I suppose, didn't I, really, think about it, for my live streaming. We're going to be live streaming throughout the summer. Got lots of things coming up in the autumn for mortgage advisors. Really excited about our Advisory Skills Academy. That's going down really well. We're teaching brand new mortgage advisors really cutting edge sales skills and marketing skills, prospecting skills, fact finding skills, psychology of people, stuff they ain't getting from their networks or their mortgage brokers that they're joining, because the training that's going on is pretty sparse at the moment, which is a shame. It's all online. People love it because they just attend a webinar. Well, it's not a webinar, it's a live training online. There's a difference. You see we've got the whiteboard here, we've got a few things happening, different screenshots. It's like being in a classroom when we teach you online for a couple of hours. It's not like, where you get like the PowerPoint and somebody's droning away in the background. We call those voice-over PowerPoint, or death by voice-over PowerPoint. Have you heard that phrase before? So really excited about that. Got the mentor scheme starting in the autumn as well. It's going well. We've got lots to offer you. If you want to get your CMAPs, that's actually the easiest part. If you want to get yourself authorized and really operating well as a mortgage advisor, we're helping you as much as we possibly can. Okay, I'm going on to my last topic of the day, which is it's got a kind of a sporty theme to it, with the footy last week, which was a bit of a disappointment, wasn't it? This one's about the British Lions. This one's entitled The Lions and Advisor KPIs. Now, the British Lions, for anybody that doesn't know, is the rugby union, that is, of course, of the British Isles, which is clever. I think it's brilliant because it includes the whole of Ireland. So hence I say British Isles, not the UK, because that doesn't include the Republic. And it's got the best players basically from those four nations. And they're rocking up in South Africa at the moment, trying to beat the Springboks, which is a hard thing to do because they're big buggers, these Springboks. They're built on meat, aren't they, out in the veldt? But anyway, the point is that when you watch the coaching team of the British Lions on the telly, and the screenshot, the cameras, obviously recording a scrum that's going on. The scrum gets boring, so it goes to the crowd, and you get these silly people smiling. Then it goes up to the coaching team. And then you've got this coaching team of very intelligent-looking men and women, usually about 4 or 5 of them, all with laptops. They've got these laptops, and they've got their noses stuck in their laptops. It's incredible when you look at it. You think, what are they up to? Why are they watching the game? They're probably playing a computer game, but they're not. What they're doing, of course, is they're looking at the laptop, which has got loads and loads of statistics, metrics or KPIs on how the players are performing. And if you were to look at a shirt of a rugby player, at the back, sewn into the back of the shirt, is an electronic gadget that size of an old calculator, I suppose, or size of a. Here, what have I got here? A highlighted pen, and this thing sits at the back. And this talks to the laptops or the software, and it's basically giving the coaches a rundown on how that player is getting on. So energy levels, heart rates. All sorts of physical measures about how that player is performing. And these coaches are obviously monitoring this all the time. If somebody's lost a lot of their power, they'll replace them and put a substitute on. They do that regularly, and that often wins the game. Eddie's pretty good at that for the England team as well. He brings in people when he needs to. So that's a great metaphor, really, if you think about it. Now, in the same way as a mortgage principal, or if you look after a team of mortgage advisors, or if you've got a few new advisors in your team, you need to have some way of measuring their performance. I wouldn't suggest you sew into their body some kind of electrical gadget. I think the FCA would probably have something to say about that. But you do need to be able to monitor their performance. And if some of the stats are not looking so good, then you need to do some coaching. I'm not saying you replace them. We might do, I suppose. But you need to do some coaching and some training and development as well. But the problem is that most firms make this far too complicated. The reason is you get a software manufacturer who sells you their software that does it all. It's just far too complex. I've seen them. I've seen spreadsheets from big corporates where you've got hundreds of data points. And these poor sales managers are looking at this, what's going on? So the software company does what they call an exception report. or a unique report which highlights key information. That's proven to you that it's just too complicated for its own good. I wish people wouldn't overcomplicate stuff. I think that's just the nightmarish thing ever. But as a coach, you do need to monitor your advisor. And there's two types. I talked about this last week, actually. The first one is your development KPIs for your advisor. In fact, the advisors themselves can monitor that, KPIs. And the second one is what we call performance KPIs. I think they're separate. You don't have to separate them if you don't want to, but they are very different. KPI, by the way, is a key performance indicator. And here's some examples of development KPIs, which we talked about the other week as well. You can have a quality score. So if you measure them against certain qualities, you can have a quality score of their capability, etc. That's a nice one to have. Number of coaching sessions that they've had that month would be a nice little KPI to have. Are they getting enough is the key there as well. Number of one-to-one reviews that you've carried out with the advisor, maybe they're monthly. That'd be a good KPI to go to as well. Live observation scores. So live scores from an observation aid, you might have sort of 70%. I carry these around all the time when I do my coaching. You watch an advisor and you're ticking off what they should be doing for their skills. I'm not talking about compliance here. That's different. I'm talking about skills, development. You can have CPD goals as well. So squeeze that one at the bottom. There's all sorts of things you can measure about their development. Now, performance, probably the most important one. That's one of the British Lions will be monitoring. That's on their key out as well. So for a mortgage advisor, you can have, for example, how many inquiries to sign-ups. Now, sign-up is when the mortgage is completed, inquiry is a lead. And you might have a ratio, say, 3-to-1 for that one, which depends on how good your inquiries are, how good your leads are. You do need to measure that. Because if somebody's burning your data and not actually signing any mortgages up, they might be the best mortgage advisor in the world, but they ain't making any money. And at the end of the day, I get it about advising is professional, but you've got to make money. It's a business like anything else. So you've got to measure that as well. You might have sort of a league of income, for example, 35 grand or whatever income you might have as a kind of a target. Be careful with that, of course. You've got to be careful with these things. But again, people need to produce an income to pay their salary and their outgoings as well. You definitely need compliance KPIs. So things like maximum complaint numbers, suitability report checking, file checking, all those things. Are they adhering to compliance? Because if you don't do that, then you're out on your ears anyway, aren't you? Activity is another one you could certainly measure if you wanted to. Activity. So you may want them to do actually 4 hours a day of client face-to-face meetings, being on Zoom or whatever. So a lot of advisors they kind of drift into easy street sometimes, the path of least resistance, they call it. They'd rather do admin than talk to customers. Some get that. So 4 hours a day might be what you've targeted them for. So these are targets as well as KPIs, key performance indicators. You may have some sort of service level agreements, SLAs. Sure you do. How quickly do you respond to an inquiry, for example? If you buy your leads, do you get onto them in 20 minutes or something like that? So you do need these things, and you need to measure them. You need to collate them either on software or whatever, or just on a spreadsheet. It's entirely up to you. And that way you can measure their performance and you can do some further coaching. That's all it's for. You get rid of people from this, but you do coach people. You have to. It's your job. That's what these people are relying upon, particularly the younger generation who want mentors. They regard mentors as trainers, coaches, confidants, all that stuff. You can't just let somebody just get on with it anymore. Maybe in the 80s, 90s that worked, but not now. You've just got to look after people. So there's the British Lions. So will we beat the Springboks? I don't know. Be good matches on Sky. So, not all of us have got Sky. We haven't got Sky, which is a bit of a shame, really. And, we just have to get used to watching the telly where they zoom the camera to the coaches up in the boxes with all their laptops. Talk about the football, of course. You go back to football, and all you see is Gareth Southgate and Mancini shouting at the sidelines at their players. That's how they do it in football. It's a slightly different way of operating, isn't it? So I hope that's been useful for you. There you go. Alrighty. As Bonds has said, oh dear, I've missed much of it. I don't think you have. You can watch the YouTube. It's always recorded. You came on at 12 because people are chatting on on the YouTube live there as well. So just you watch the recordings, no big deal there. So that pretty much ends today. We've been operating for 25 minutes now. Remember, we've got lots of things going on. On Saturday morning, I've got the protection qualification podcast continue. Got last 2 or 3 to go on that. Now that's producing a complete MP3 collection for your protection quals, as we call it, protection qualifications. For those of you doing CMAP, you know that CMAP 2, they're bumping up protection big time. Great decision on the LIBF, by the way, doing that, because it does need it. And for those of you who don't get that, you have to do some CPD anyway. So you might want to do the protection qualification exam. So we're producing tons of material. There's loads of videos and audios, and we're putting a new portal, a new boot camp out in August time for that. So we'll do it on Saturday. It's free, by the way, the 10 o'clock one. Just get onto our database. Everything's on the database. You have to become a member. Go on the website, become a member of our website's archertraining.com. So that gets you to be a member, and we email you every week with things that are going on, all the updates, etc., which are great things for you to keep up with. So that's pretty important. Got a new CMAP bootcamp starting on the 2nd of August. We've got about 15 or so spaces left on that, if you're interested. That gets people through CMAPs within a 3 to 4 month period. Extra motivation. We've got all the extra goodies we've got coming on where we mentor you, we help you, we give you sales skills. Remember, our goal is simple, really. We want to get as many really good people into the mortgage sector as possible so they can move on upwards to the advisory sector and really get this industry working and modernized as well, is where we're going with it as much as possible. Anyway, I've talked enough. Hope you've enjoyed the live stream. Like the new camera, by the way, has it made a difference? Hopefully it looks a little bit better quality. We've upgraded our equipment in the last couple of weeks. And anyway, enough of that. I've talked too much. I'm Paul Archer. Talk to me, chat to me, whatever you can do, and I'll see you next week.